We are live.
Yeah, we've gone live now.
Okay, I got the message.
Assalamu alaikum, everyone. Welcome, everyone. I would like to start the proceedings for this webinar. Bismillah ar-Rahman ar-Rahim. Qul huwallahu ahad, Allahu samad, lam yalid walam yulad, walam yakul lahu kufuwan ahad. Starting with the name of Allah, the most gracious and the most merciful. Assalamu alaikum, everyone, and good evening. I welcome all of you to the ICAP seminar on financial services, the challenges and the way forward. Before we kick off the proceedings, I'd just like to share some house rules which will have to be kept in mind as we progress with the webinar. First of all, if I get disconnected, one of my fellow friends, Rauf Ali Jan, will take over as the moderator. Until I hopefully till I join back shortly if there is a digital or communication disruption. Secondly, if the same digital problem or communication issue happens with one of the panelists, I'll move to the other panelists with a question and we can regroup and recheck once the individual is back. We have the option of asking questions. So as we go along, and the questions for all the people who are listening to this webinar, they can put their questions in the question and answers tab in the Zoom, as well as on the Facebook Live. So it's a great opportunity for everyone to ask the questions, and there'll be a team working to make sure the right questions gets escalated to the panelists later on in the process. We'll also be running a poll. The poll results will be published once at the end of the webinar. And before we start the proceedings, I would just like to highlight the next few steps. Now I'll, just after this quick house rules, I'll hand over to Khalilullah Sheikh, the president of ICAP, for the welcome note. After that, we'll kick off the panel discussions. Then there'll be a Q&A sessions coming out of the feedback which you're receiving. And in the end, we'll have vote of thanks from Mr. Khalid Rahman, who's an ICAP council member and heads the PAIB committee of ICAP. So with this, I'd like to hand over to Khalilullah Sheikh, who's the president of ICAP, for his welcome note.
Bismillahir Rahmanir Rahim. Thank you, Al-Mughan. Assalamu alaikum and very good evening to all the participants and all our viewers. First of all, my gratitude to all our speakers, our panelists today, Dr. Shamshad Akhtar Saiba, Jameel Ahmed Saab, Atif Bajwa Saab, Irfan Siddiqui Saab, and Irfan Ali Saab. Thank you for sparing time out of your busy schedules and gracing the occasion and taking out time to share your wisdom, your thoughts, your experience with our participants. This is certainly a very important seminar. My compliments to our PAIB committee led by Khalid Rahman Saab, who has been very frequently and regularly organizing these webinars for the benefit of our members and general viewers. We had several such webinars before on economy, on various sectors, pharma, oil and gas, and now today on the financial services industry, which is certainly very central to any economy, serving all other sectors of economy. So Khalid Saab, compliments to you and your entire team. Now, coming to this important seminar, we know that COVID has hit every aspect of our life, every sector of economy. And we will learn first from our leaders today that how has COVID actually impacted this very important sector itself. Before COVID, we saw a sharp increase in interest rates for a very short period of time, and then post-COVID as a policy response, we saw several measures as well to support economic activity, reduction in interest rates, rescheduling of loans, payroll financing, etc. So what's your view about these measures? Because they are the people on ground dealing with industry leaders day in and day out. to what extent they feel this has actually improved the situation, what else should be done, what's their view about the overall economic affair. We would also learn from our esteemed speakers today. We have a galaxy of speakers, that how this COVID has actually, this adversity has helped their transformation journey. We know that even before COVID, this financial services sector, many players were reviewing their operating model given the financial services landscape, digital financial services landscape, which is shaping in. So we will also learn from them to what extent this COVID has actually accelerated the pace of it. We saw regulator also bringing in some positive steps to improve the ecosystem in the digital financial space. So we'll learn from our speakers today about it. This AML FATF is also one area which I believe our participants would be interested in learning to what extent now they feel this sector is robust enough in terms of international compliance requirements. So with this, I believe that we will have an excellent learning opportunity today for all our participants with the esteemed leaders we have today from financial services sector. With this, again, a very warm welcome to you. Armaghan, over to you. Thank you.
Thank you very much, Khalilullah, for your welcome note. I would like to first highlight our panelists, members who are going to contribute and whose experience and expertise will draw upon for today's session. So we have with us Dr. Shamshad Akhtar. She is an ex-governor of State Bank, former minister. She has had international experience in multiple fronts on development finance, as policy setting roles with multilaterals. She's been VP with World Bank, and she's a representative of UN in multiple roles. And currently she's a chairperson of Karandaz in Pakistan, and she has taken a lot of the advisory and policy setting roles in her distinguished career. So extremely privileged to have her here. Next we have Jamil Saab. Jamil Saab, again, needs no introduction. He's the Deputy Governor of State Bank of Pakistan. Over 30 years of experience in central banking, both at State Bank of Pakistan as well as at SAMA. And he has been representing Pakistan at the Basel Committee, as well as other forums, including FSB. So very, very senior and distinguished career and expertise with us today. Then we have Irfan Ali Sahab from, again, State Bank. A lot of contributions at a very, very senior level throughout his role at State Bank of Pakistan. His contributions in policy setting, in supervision, around AML policies, around FATF matters, payment systems, settlement systems, and the policy-making role around branchless banking, so on and so forth, has been very, very active on the national front. So a lot of experience there. Then we have Mr. Atif Bajwa. Mashallah, he has had 30 plus years of international experience. He has served international banks in regional, cross-regional positions. He has been the president of MCB, Sunari Bank, and currently he's the president and CEO of Bank Al-Falah. And he has been sitting on quite a few other corporate governance and other policy setting roles in positions of interest. We've also got with us Irfan Siddiqui Saab. Mashallah, extremely privileged to have him here. He has been the CEO and president of Mizan Bank from day one, from the time it got started right till now for the last 18 years. So he has seen the end-to-end journey from when it was the bank was set up, and now, mashallah, what the bank positioning is in the current FS sector. So extremely proud and extremely honored to have such an august company here today to share their thoughts. And I would like to start with Dr. Shamshad first on. So Dr. Shamshad, as it was, Khalilullah just mentioned a bit about COVID and the challenges it posed. Now we all know it's a unique crisis we are in many ways. So it affects us. It's not a financial services crisis. It's not an economic crisis in itself. It's a humanity, it's community, it's our families. Everything is in it, right? And the second matter of fact is that before we kind of go into the details, and I would want to just give a very high level 2-3 data points, Doctor, for consideration. I'm sure you will have many, many more. Just wanted you to share your oversight over the banking sector in Pakistan and the financial services sector. Obviously, you have been at a very, very important and critical positions at a national level. So if we look back 20 years, we have had significant progress in financial services. We have had in the last decade, the assets, liabilities, and investments of the banks have almost doubled. We have got 30 plus players now. At the same time, Dr. Saab, we have got challenges around the financial inclusion aspects. And we have got challenges around, where our deposit base, based on which factor you look at, compared to the, our peer group in the region is probably lower end. So I just want you to lay the groundwork and give, macro perspective on the journey we have had in the last 10, 20 years. And how should we look forward? What, in your opinion, are the factors which we should need to strategize now in this COVID/post-COVID environment? So Dr. Saab, over to you.
Thank you so much. And Bismillah ar-Rahman ar-Rahim. I'm really grateful to ICAP for inviting me and to be able to listen to such distinguished panelists. I have not had the occasion of saying hello to all of them, but it would be a pleasure to hear everybody's viewpoints. I think COVID, of course, has distracted all of us, but it has distracted those sectors much more that have been on a weaker footing. Pakistan economy being the case in point, but also other developing countries that have had contraction, but also economies that do not have strong and diversified financial system ought to be facing more complexities. The COVID-19 pandemic and the adoption of Sustainable Development Agenda, which is something that I have been subscribing to, ought to be a game changer for the financial services. It should provide impetus to digital financial services, which in my view should be the cornerstone of the turnaround of the financial services industry. It should provide impetus to digital financial services, but to fully leverage the potential, this change needs to accompany and be an integral part of a deeper transformation of the financial intermediation process. The world of course, global and regional finance, as we all know, is fast transforming. So when you raise the question of banking, I feel banking, of course, in Pakistan has moved ahead, but it's the non-bank sectors that have lagged behind. But all in all, it's important to recognize that Pakistan's financial sector has indeed great future and great potential. The reason why I say that is, of course, the rising middle income population, which at 40 million, youth population size, high consumerism, opportunities to harness domestic savings and wealth generation, and opportunities to enhance inclusion, one of the points you want me to touch. Almost 3/4 of our population is excluded from financial system, with 100 million people unbanked and 21 adults have transactional accounts, with access to women only 7% relative to South Asia and lower middle income countries whose averages are 53% and above. My second point is that despite this potential of financial sector and within, of course, the banking, this sector has been substantially underperforming and underserving people and the economy based on the statistics I have just quoted. The impact of the early rounds of reform over 2000, and I was very much a part of it, although the reforms started before I came to Pakistan, they have paid good dividends. We have been able to transfer about 80% of the bank assets in private hands. We have had liberal entry of the foreign banks, followed by very interesting mergers and acquisition process, because I asked for us to raise the capital requirements of the bank. And also, Pakistan has promoted alternate banking options and Islamic banking. Of course, you will hear a lot from Irfan Saab. It has gained grounds. Islamic finance as a whole accounts for 15 percent of the deposit and 17% of the total bank deposits. We have had a major breakthrough in the microfinance industry, and then branchless banking, which Irfan has been a great architect. And we have also licensed telecom and mobile operators. We've had growing recently initiatives of fintech, affiliated technology, data services, so on and so forth. Our country managed to shift from the broker-led exchanges to unified corporatized exchange by offering shareholding to Shanghai and Shenzhen, which is not a small measure. We have also had private sector growing in the insurance sector. Now, my third point, despite all this backdrop, because of lags, system rigidities, and very severe bouts of macroeconomic instability, financial sector of Pakistan has yet to deliver in number of areas. Foremost being the gross domestic savings to GDP ratio, which is barely 5.2%. It's the lowest in over 3 decades, and amongst regional peers, Bangladesh 25%, India 28%, and so on and so forth. The second concern that we have to worry on, and that's why I feel we are not very well prepared for COVID, is that compared to regional comparators, Pakistan's financial sector asset to GDP ratio is quite small. Bank deposit GDP ratio is about 35% relative to India's 64, double. The economy remains reliant on bank financing. Bank assets consist of more than 70% of the country's total financial assets. Now, the favorite part that all of us in Pakistan has is the steep government borrowing demands, which for decades have reduced the loanable balances for private sector. No doubt, our private investment GDP ratio, besides the low domestic savings, has been influenced and by these lack of loanable funding, and our private investment GDP ratio is half of the emerging markets. The role of financial sector is to help the economies grow and to reduce poverty and make sure everybody's demands, every sector and every demands is met. Now, unfortunately, we have a financial sector which is looking only on one side. The market capitalization of the Pakistan Stock Exchange is only 13% of GDP, when Malaysia it's about 15%. We only have about 250,000 retail investors in the equity market, and the business is concentrated in large brokers. You look at the assets under management, the story is pretty sorry. Now, let me touch briefly another sector which I have been currently working on, which is the the insurance sector. Public insurance, SLIC and NIC, which are supposed to be a strong players, supporting the banking as well as the market, stock exchange, are dormant players today. The SLIC has not been corporatized even. All of them seem to be supporting again the budget financing like the like the banking system. Pakistan Reinsurance Company is another sorry state. It enjoys preferential treatment. It has a statutory protection, and it tries to all the general insurance have to place mandatorily a certain business with the PRC. Now, when you look at the financial positions of these companies, it's pretty worrisome. So the country's annual infrastructure spending, my fourth point before, just to move from the background on the financial sector, is that development finance is not being serviced by financial industry to the extent it should. The country's annual infrastructure spending is about 2.1, 2.5% of GDP, which is half of what they spend in Bangladesh. And given our own requirements, and if Pakistan is to remain at par with the region, we need to increase our annual infrastructure spending to 8 to 10% of GDP. This can't be done alone by the banking system, but banks have to start lending long and also blend it with other currency products. But also markets have to play an important role, institutional investors, as well as the capital market. Let's look at another key component of the development finance, SME sector, grossly underserved. Outstanding SME bank credit fell by half from over 15% a decade or so above. At least that's the number I knew when I was in Pakistan earlier. It's now barely 7.6%. The number of SME borrowers is barely 185,000. These are state bank statistics. Third, and the last area that I'd like to touch on the development finance is that we don't have a strategy to finance the sustainable development goals. We have such lack of coverage of basic services. There is no concept of municipal finance in this country. Municipalities are in a dire state. Funding for climate adaptation and mitigation, which is increasingly coming from the private sector, given that particularly our fiscal deficit is reaching 10% of GDP, has yet to evolve. Financial system is not only underserving these, but is losing the opportunity to exploit these businesses. Central bank now has offered a range of refinancing facility, and I think the response of the central bank is very good, and it's diversified also. It's compensating for the fiscal constraints, of course, but the refinancing facility is given because of the weak deposit base and the low level of loanable base. Now, obviously, in COVID, there is a liquidity issue, so it's legitimate to give these refinancing facilities. But we have gotten out for a long time from these kind of priority lending approaches and refinancing facilities which have an inflationary impact. So while it's common to spur lending through refinancing arrangements, all the other countries of the world are doing it, but it is not a sustainable approach to financial intermediation and has unintended economic consequences and deters prudent lending, and it is not known to catalyze long-term lending. And we have, on the other hand, 40% of the currency sitting in the banks. Our system has kept going without a radical breakthrough in deposit mobilization or to break the burden on the banks of the budget, which is, and also financing public sector liabilities. So public sector is crowding out private sector, and private sector is not going out to raise the deposits. Pakistan, in my view, now needs to, having launched the reforms in the past, it's time to wake up. We need to embark on comprehensive, integrated financial sector strategy, not just banking strategy. Of course, we have separate regulators, but that is, in my view, is also a real source of the problem because coordination is weak. So what should it do? It should address the financial market segments inadequacies and shortcomings. It should address the problems of the ecosystem because banks can't lend if SME policy, legal regulatory framework is not right. Same, you give mandate the banks to give 5%, of their credit, of their total credit to housing. But what of all those distortions in the housing sector? Same for the infrastructure. We don't even have proper credit enhancement mechanism as yet. Insurance sector, which provides long-term funding, is directed again to the budget. The role of development finance needs to be nurtured further, not just by the central bank, which has done relatively better, but the development finance institutions, DFIs, are dominant players. Everybody seems to be investing in government securities, up to 40%, 80% in case of some of the insurance companies. And equity markets, of course, are a big mystery to me. I have had the opportunity to work on the capital markets in 1990s, and I'm very proud that there was a major transformation. We moved from a broker-led governance model to a corporatized model of exchange, and we have had induction of corporate players. We have had Shanghai and Shenzhen there, but there is still a lot of work, but there is a lot of promise also there. Let me get to my fifth point, which will lead me into a conclusion. Besides the resolution of inherent structural rigidities of the financial sector, I think Pakistan needs to recognize that there has been a sea change in financial landscape of our regional competitors. So Pakistan has to have a standing in the region. It has to compete. A vibrant and well-diversified financial sector with stronger risk appetite is critical for leveraging funding for SDGs, which is what I look for to mobilize the financing, and also for sustainable infrastructure development. Also, we require companies should be seeking finance to comply with ESG guidelines. Global central banks have now taken the technical work to seek companies to report climate disclosures of projects. Regulators are now galvanized and agreeing on the taxonomy of the regulation for climate finance. And I have been engaged in some of that work. All these developments have implications for Pakistan's financial system. Our central bank has been aware of it. It's done green financing guidelines. We need to do much more. We need to issue, banks need to issue green bonds. Bank needs to manage the transition risk of the stranded assets and so forth. The sector needs more systematically also embrace new technologies, which is the cornerstone of the future transformation. So we need digital banks. We need contextual banking like e-commerce and other online industries. Banks have started to realize that they are sitting on gold mine in terms of customer data. So we need to tap all of this, big data, artificial intelligence, digital, and one can go on and on for all this. But I think the bankers here already know that. Most of all, we need to give more impetus to fintechs because Asia is now the leader in fintechs. It relies on technology to automate financial services and can offer a wide range of services provided financial ecosystem. They require access to the bank system to get real-time customers' information. So what are we doing in Karandaz is my concluding point. We are working very closely with government of Pakistan, but more so with the central bank, basically to promote digital financial services because we have been sponsored with the funding of the DFID as well as Bill, Melinda and Gates, which is big on digital financial inclusion. So we are helping in the development of micropayment gateway, which hopefully should be operationalized by December of this year. It'll give interoperability between mobile wallets and other providers. We are helping SECP digitize to enable electronic collection and storage of enterprise records. We have just done jointly the STRs, Secure Transaction Registry, We have promoted Pakistan Microfinance Investment Company, which is a wholesale investment company, and it serves 20 borrowing institutions to provide liquidity. And PMIC has 7.3% of the microfinance market share. We are promoting 2 credit enhancement bodies, and InfraZamin, which is a for-profit credit enhancement facility, which is relating to my point on infrastructure. It's an NBFC domiciled in Karachi with a capital base of 15 billion. Its sole line of business will be to issue credit guarantees for infrastructure related to different instruments. We are working with the Central Bank and Ministry of Finance on Pakistan Credit Guarantee Company, which is an SME credit guarantee company. We are in the process of working on establishing a real non-bank SME institution, and we are working on the regulatory framework for digital banks, and we are working hand in glove with a lot of these players in order to get the regulations right and all that. So I'm going to stop here, but just conclude by one word, that future of financial sector lies in continuous strive to reform not only the indigenous power of the financial sector, but to embrace the multiple frontier technologies, and to make sure they are married effectively, because there is great potential to enhance financial inclusion and to do development finance through the frontier technologies. Thank you.
Thank you very much, Dr. Shamshad. Thanks very much for the elaborate and detailed overview of the challenges as well as the opportunities which are out there. So being an optimist, yes, there are lots to be done, and we absolutely, I think your view has been very, very to the point, covering all the angles in the ecosystem. And it's something which we all will discuss now and take it forward. So thank you, Dr. Shamshad, for your very, very elaborate thoughts. So moving on to Jamil Saab now. Some of the stuff which Dr. Saab has highlighted, it revolves around, increasing the depth and as well as, embracing the vision of State Bank into the future of financial services. And there were a lot of dependencies on the fiscal measures, as she talked about. But just want to hear from your perspective, Jamil Saab, as to the vision of State Bank of Pakistan. Firstly, a lot of activism was shown in 2020, where State Bank of Pakistan ensured that there was no liquidity crunch in the market, and the financial services industry, under the guidance of State Bank of Pakistan, made sure that the basic services and the essential services were provided to the ecosystem, and the pulse kept on running. And to some extent, the pulse was raised as well under the guidance of State Bank of Pakistan. So Jamil Saab, the challenges of diversification, the challenges around SME sectors, unbanked sector, undocumented economy, and the future challenges. So just want to hear your thought points around State Bank of Pakistan's vision in this space, sir.
Bismillahirrahmanirrahim. Thank you, Arman Saab. First of all, let me also start by saying that after Dr. Shamsad's speech, obviously, she's my former boss also. It's difficult to speak, but I mean, she has raised a number of points related to the financial sector, and I think she is one of the experts on the financial sector of Pakistan, and the points she's raised are quite relevant. And on some of them, we are working from central bank side, and others also, there are other regulators like SCCP also, so some points relate to SCCP. So I will focus from the central bank perspective. First of all, let me thank ICAP and President ICAP, Khalilullah Saab, and other ICAP officials for inviting me to be a panelist, and also thankful to my colleagues also for joining from banks Ataf Bukhari Saab, Irfan Saab, and other panelists. I think I will like to dwell on to 4 or 5 things, and then I can receive questions if there are any specific questions. So starting with the some of the initiatives which State Bank has taken recently, post-COVID situation, and we all know that it's a very different environment in which we are operating, and somebody said that it's once in a century kind of incident through which we are going on right now, and it has posed very specific and very different challenges which we were not used to deal with. But over a period of 4 or 5 months, I will say, we have learned a lot and have tried to adjust our policies and took a number of initiatives to cope with the challenges which has been posed by COVID situation. So from I think the perspective of banking sector, I will say that we have taken a number of initiatives, not just to address the issues faced by the banks, but also the customers of the banks, and also to dispel some of the impact of the COVID on the larger economy, and to ensure that banks are in a position to provide the required flow of funds to the various sectors of the economy, and particularly the priority sectors. So within that, as you all know, that we have taken a number of initiatives on launching various schemes. And some of those schemes are quite successful, I will say, although previously whatever we have done on the priority sectors, particularly the SME, we took a number of initiatives. But unfortunately, those schemes could not effectively take off, and there was very little uptake in those schemes. So we are in the process of reviewing those schemes also. But as far as the recently launched schemes, including the Rozgar scheme, for instance, which is a kind of flagship, become a flagship scheme for saving the jobs in the country. So that's a very successful scheme. We have already crossed 125 billion mark, the refinance which we have provided to banks, and then they on lend to various sectors of the economy, and that includes SMEs, medium-sized corporates, as well as larger corporates. So as a result of that, we have been able to save something like 1.3 million jobs of the recipients of these funds from banks. So that's a significant amount, I will say, and that is still continuing. We have already extended the date for availing this scheme. So more corporates, if they haven't already benefited from this scheme, they can benefit from that. Second scheme, again, so this was more focused on facilitating the corporates and small enterprises to withstand the shocks of COVID. But from a longer term economic development perspective, we have launched another scheme, which we call TURF. TURF stands for Temporary Economic Refinance Facility. So that scheme is a longer term financing scheme, similar to what we already have LTFF, long-term financing facility, which was focused on certain specific sectors and particularly the export-oriented sectors. But this one new scheme, which is TURF, is Temporary Economic Refinance Facility, is more focused on generally on all other sectors of the economy. So it's a 10-year scheme, which is meant for not just the greenfield launching of greenfield projects, but also for availing BMR by the existing projects. So we hope that with this scheme, the industries will be able to take risk and will install new projects or will modernize the existing projects so that they can contribute in the economic activity more effectively. And already we have seen significant takeoff under that scheme also. So around 70 billion applications for around 70 billion financing has already been received, and a number of projects have already been financed, and in fact, in some cases, disbursement has also been made. So that scheme is although a long-term scheme, but is as effectively taken off, and borrowers are availing this scheme also. Then we launched a covered hospitalization scheme, which means that we can provide healthcare facilities. Initially, it was focused on the covered related facilities, but subsequently now we have enlarged the scope of this scheme. So that's more focused on developing health infrastructure, because this is one area where we are facing problem as a nation. So we thought we should play our part and contribute something in building up the health infrastructure in the country. So that's the other scheme. Then in order to facilitate the existing borrowers, we have allowed them deferment of principal facility, which means that the borrowers which are facing problems due to COVID situation or due to the adverse effects on their business, and they are not in a position to repay, so they can avail deferment in principal repayment, or if they are facing some structural problems, then they can also benefit from the restructuring scheme, which is another scheme which has been launched. So they can go to bank and restructure their loans, provided there is a justification and their business is viable. So that's the that's an facility which they can avail if they have a viable business. So they can go to banks and can negotiate this facility. Then we on other initiatives which we have taken under COVID situation, some macroprudential supervision, which are more focused on banks, whereby we have provided certain capital related reliefs and some provisioning related reliefs to banks, so that if the banking industry is having some issues as a result of COVID, so they can also be facilitated and they can perform better in the existing environment. Now coming to, so these are some of the schemes which we have launched for priority sectors. Now I will mention 3-4 other things. One is that we are working on developing our payment infrastructure. On this area, we have done a lot of work. So we launched a national payment system strategy, whereby we are taking number of initiatives under this 5-year strategy. One of the key projects under this strategy on which we are working, and which is about to be now, first phase of this project is about to be made operational, is the micro payment gateway. This is a huge project in the payment system infrastructure area, and on this project we are working in collaboration with the Bill and Melinda Gates Foundation and Karan Das also. Once this project will become operational, first phase is going to be operational early November this year. So I think this will be a kind of revolution, I will say, in the retail payment infrastructure, as far as the retail payment infrastructure is concerned. And this will also facilitate payments and will bring efficiency and will facilitate the customers. Similarly, there are a number of other initiatives under payment system, and in order to facilitate the customers, as you all know, under the COVID situation, we have already requested banks, and they have acted on our request, and they have waived the charges for internet banking and for POS machine use and for other related payment infrastructure. So we think this will contribute a lot in digitization of payments, and as a result of that, already we have seen significant increase in the digital transactions. So I think that's a facilitation from the banking industry side to the customers, so that they can do transactions online, or can choose the other alternate delivery channels to make fund transfers and to pay bills and to do other related transactions. On the financial inclusion side, on the financial inclusion side, I think this is a very one area which is quite close, I will say, to the chest of Dr. Shamsad, and she is the pioneer in launching the development finance group in state banks. So one of the area within this group on which we are working is the financial inclusion, and we have a 5-year strategy for promoting financial inclusion. And if you look at the data, you will be quite pleased that there are a number of initiatives which have already been taken, and those are reflected in the increase in number of accounts which the banks have opened. And there are various categories of accounts, and that includes the Asan accounts also, which are meant for lower segments of the society, whereby anybody from general public can also open that account, and documentation is also relatively simplified.
Thank you,
So
Jamil
people
Saab.
are,
Sorry,
yeah,
in the interest of
yeah,
time, I'll slightly have to interrupt you here. I think
yeah,
very well explained, Jamil Saab, that the macro level challenges for economy like ours, emerging markets / frontier, are huge. But at the same time, as central bank of the last resort, or in this situation being the first line of defense, I think the recent times, these COVID times, we have really clearly seen the sea of change which has brought about in terms of how transactions are carried out, the initiatives which State Bank has taken, and as you said, the need to do more in terms of financial inclusion, as well as the revolutionary introduction of the payment gateway. So I'm sure, inshallah, that is going to pay very, very strongly, or inshallah will get better and will get more digitalized based on the initiatives taken. So thank you, Jamil Saab, for helping us understand these initiatives. I'll move to say that Irfan Ali now. Irfan Saab, slightly changing the subject a bit in terms of the matters which are closer to your heart in the current scheme, mainly around FATF agenda, mainly around how the recent in bringing into scope of post office and the planned actions with the CD, NS, along with the non-financial business and professionals. If you can give us a quick update, for the audience to understand what's happening and currently on the national FATF agenda, so we can then open up the with the more discussion areas. Thank you, Irfan sir.
Thank you so much, Armuzan. And having listened to Dr. Shamshad and Jamil Saab is my current boss, and Dr. Shamshad was my boss. But anyway, I must point out to all the participants here that it was Dr. Shamshad Akhtar, under whose leadership we set up the FMU, as you now see it, the Financial Monitoring Unit, and it was under her leadership again that we set up the branchless banking network that you see. But anyway, Jamil Saab ko to main report hi karta hu, so whatever I do accomplishes, obviously his contribution is always there. Okay, now coming straight to the questions, there are two things that must be kept in mind. One is that we are not only under a FATF action plan, we are also undergoing an MER. So the requirements of both FATF and MER are different. FATF action plan is primarily focused on terrorist financing, while MER is your overall compliance of AML CFT. So the requirements of both these streams are different, with different risks, and with practically different teams we're working on both those teams. For the FATF action plan, you guys will be pleased to know that the component that pertained to the financial sector, that was called IO 3, and that primarily meant that we had to demonstrate that we understand risk, which we did, and that we were found compliant. Then we had to also demonstrate that we are reaching out to the bankers, and bankers are reaching out to their customers on the requirements of AML CFT. That portion too has been rated as compliant by the FATF evaluation team. And so the financial sector and State Bank of Pakistan, obviously not alone, this is State Bank and SECP and others. So there is and FMU and the Ministry of Finance. Everybody is playing a good part in it, but naturally State Bank has taken the lead, and we have done very well. Then we have carried out some very serious inspections, and those inspection results have been fruitful from a regulatory point of view, but bankers like you will feel unhappy about the penalties that have gone in. But anyway, resultantly what has happened is that the systems and procedures, name screening solutions, artificial intelligence mechanisms, the mechanism to catch prescribed and designated individuals, all those are in place. In fact, and none of the items that pertain to State Bank of Pakistan is non-compliant. In fact, we are most of the items that pertain to State Bank and the financial sector, we are compliant. But we are we're trying to improve the position as far as overall AML CFT compliance is concerned. Then comes the question of the two entities that you talked about. They are CDNS and Pakistan Post. So what has been decided is that there is an oversight board for both these institutions, and State Bank is a member of that oversight board. And so are the CDNS personnel, the Ministry of Finance, and the Pakistan. So these are two separate oversight boards. So from a regulatory point of view, there is an oversight board that is looking after the AML CFT part of both these institutions, and then there are other transformations coming up, and banks are being lined up to carry out the AML CFT component for CDNS. As all of you would be aware that in parallel to the financial sector, CDNS has a very large deposit base. So it is equally important that they also come within the regulatory ambit as a financial institution, but then there are challenges. And coming lastly to the DNFBPs, designated non-financial businesses and professions. So what has happened here is that these institutions are now have been specially classified, and their regulator has been decided. For example, a major profession that is accountants, their regulator would be the Institute of Chartered Accountants, that is the ICAP. For precious metals and gem dealers, their regulator would be the Federal Board of Revenue. For real estate agents, it would again be Federal Board of Revenue. And for lawyers, it will be the Pakistan Bar Council. But yes, these institutions or these professions are not really, they're not trained to be regulated, unlike financial institutions that are used to being regulated and have years and years of, in fact, they owe their existence to be licensed, unlike a lawyer or an accountant who has to follow his own stream. So then FMU exists, and FMU is doing a fantastic job as far as analysis of STRs is concerned, and so are the financial institutions. So it is a combination of State Bank of Pakistan, FMU, and the financial institutions that are taking all the necessary steps that would fulfill the requirements of PATF in the short term, and MER, that is Asia Pacific Group on Money Laundering, in the long term. So these are the two streams of processes that are going on simultaneously. Thank you.
Thank you, Irfan sir, for such a detailed and very clear view. कि बाकी sectors भी financials के अलावा बाकी sectors भी अंदर आ जाएंगे as part of this bigger play as a part of the national agenda. So moving quickly to Atif Saab. Atif Saab, what we have heard now, and we know as sitting in the profession, this is a watershed moment for us. आगे चीजें कैसे होंगी? Digitalization has been talked about. New operating models, new reach out to the customer. So we started off with this crisis in a mode of resilience, right? Laptops scramble, VPNs, get everyone to work. Now we have moved on. Now we have to, go forward in a new normal. What is your take on the impact it's going to have on processes as far as people, governance, and the overall system of the financial services, banking institutes are concerned?
Thank you, Argaman. Again, let me also thank you ICAP, Khalil Sheikh, the president of ICAP, for having invited me to be a part of this panel. I think it's been very interesting to listen to the comments that have preceded mine. Clearly, Dr. Saba has a world of experience, globally and in the central bank here, and of course, she's involved in some really developmental stuff even now. I think her her highlighting the issues in the financial services sector where the shortfalls exist, whether it's the lack of capital markets or the development finance institutions, lack of focus on SMEs, poor financial inclusion, savings rates, etc., are absolutely right. So I 100% agree with that, and that's been a problem with the Pakistani financial services sector to address these things. And I think this is an opportunity that, being an optimist too, like yourself, I see as a real opportunity to address some of these things if we get our minds together. Clearly, the short-term objective has been, as Jamil Saab pointed out, to address the immediate issues that the customers have faced, and that have been primarily around liquidity. And customers to survive a shock of this kind needed to be supported by enough liquidity in different ways to just survive. And the various types of support and relief packages that Jamil Saab pointed out were doing exactly that. I think while the banks have also come forth and supported this initiative, this is not enough, because we know that you can't continue to hope for the economy and our customers to revive just on the basis of liquidity, which really has been incremental lending. So through this process, the banks have taken on an increased risk on their balance sheets, and the customers have taken on increased risk on their balance sheets. So going forward, we have to look at the world in a very different way, and banking institutions have that responsibility to make sure that their own operations are changed significantly, and that they help the customers in different ways. So one of the things, for instance, is that we are looking at, and I think Irfan will talk about as well, is how do we really change this temporary support that has been provided through the help of State Bank into a more longer term way of thinking, where we can try to provide longer term capital for the companies that are likely to come out of this issue, hopefully by end of this year or next year. How do we ensure that their capital structures are the right ones, and that we support them with the right instruments, whether it's a debt instrument or it's a quasi-equity instrument, or indeed equity that comes into supporting their balance sheets longer term. So I think we have to move into that kind of thinking and not be short term anymore, because short term loans will not be sufficient. In this, I think the need to develop capital markets for longer term funding is going to be critical, which is something that we need to be doing, and we've been speaking about it at various meetings within the banks. How do we actually finally get the capital markets going to raise long-term capital? DFIs, of course, have to play a role there, absolutely critical. But also here, SMEs, the ones that are most affected by this shock and have not had the capacity to withstand this shock in many ways. I think we have to be responsible enough to go in and take on the task of helping SMEs to come out and not only survive, but to become more efficient players for the future. The future is different for each sector. I won't go into too many details there, but we have to really be looking at some sectors that will survive as is, some sectors that will need to go through significant transformation to survive, and there will be other sectors that will probably not survive. So I think there's a job for all of us to do, which one is which, and how do we support them to get to the next phase of their lives. So that's on, as bankers, as lenders, as capital providers, as funding providers, that's one area that I think we need to change our thinking for the future. The second part clearly is how do we make transactional convenience go to the next level. So, we talk about digital a lot. We really have to step up our game as an industry. We've realized that customers would much rather do transactions through different digital channels. We've seen, for instance, in our own bank, the ratio of banking in-branch transactions to digital transactions go through a significant shift. And so this just shows that customers are willing and able to take on digital transactions if the push is there, and the push has been there because of COVID-19. But I think we need to now take it to the next level and make transactional convenience much more easy for our customers. And that is just not having an app, and that's not just having internet banking. That really means fundamentally changing the processes that we currently go through, which are very paper-based and time-consuming, and convert them to digital transactions inside out. And that also means that we have to take this outside of the banking sector also. So a lot of our paperwork actually comes from outside the bank that we have to then decipher and take decisions on or conduct transactions on. We have to push that end also to become digitized. So one of the conversations that we're having with NAFTA is that this low-income housing scheme that is being pushed aggressively by the government and being supported by the State Bank and of course the banks needs to, since it's being created from ground zero, we need to make use of technology and digitize the whole process so that titles are digital, transfer of titles is digital, transparency is ensured, and the whole process at the end becomes digital as well. I think if we do that well, it will fundamentally transform the way we do banking and how customers interact with us. So those are just two or three areas that I thought that I would highlight. There are many others, but I think there's paucity of time. One thing before I let you go to Irfan is that we have to ensure that HR our HR strategies are focused on making ourselves future-proof. So that's an easy word to just put in there, a phrase to put in there, but it's a very tough task. We have to ensure that the future HR of our institutions is geared towards technology and towards digital and to a new way of thinking.
Thank you very much, Atif, on this one. I think very topical. You brought in the concept and as originally also Dr. Shamshad said about responsible banking. And it's not about the app, it's about the customer experience you bring into end-to-end. And also the supply chain, any new processes which you're looking through, any new changes, they have to be paperless. They have to have that part of heart and soul of banking in it rather than simply an app. So this brings us nicely into the question which I really appreciate, Irfan Saab. You have been very patiently waiting here because the discussion was so live. There are a couple of questions. I understand you have got some personal commitments. So I'll lump both the questions together for you. So the first part of Irfan Saab is around Islamic banking. You have been at the forefront of this leading Islamic bank in Pakistan. With the challenge of unbanked, with the challenge of people where there's a lack of trust, and immediately our faith comes in. So how do you see these faith as well as the responsible banking coming where Islamic banking has a big role to play in the future of financial services. So I think that's the first part of my question. And if you can highlight your own journey and experience, that would be very helpful. And secondly, because we talked about the liquidity challenge and how State Bank and other facilitating banks facilitated the liquidity challenge, how would you see going forward in 12, 18 months time, whether we would be sitting on a significant credit risk which may balloon up for the industry? So Irfan Siddiqui sir, thanks for your patience.
Right, Bismillahirrahmanirrahim, Assalamu alaikum. I think being the last sometimes is very challenging, but it's always a delight to hear Dr. Shamshad. Since you asked about Islamic banking journey, she actually inaugurated our 100th branch, I don't know how many years ago, but mashallah, now we're sitting on 800 branches, in about 7-8 years time. So our journey of Islamic banking actually started as a thought process in 1995. So it's like 25 years ago. And that was purely driven by faith that, you need to move to away from riba. So we started our journey as an investment bank. It was called Al Mizan Investment Bank. And then in 5 years later, we had the opportunity of acquiring Society General in Pakistan, which gave us the license to do commercial Islamic banking in Pakistan. And I'm really grateful to State Bank. Jamil Saab was there at that time as well, and Dr. Ishrat, that they granted us this first ever license to do Islamic commercial banking in Pakistan. There was no concept of, commercial banking in truly Sharia compliant way. And it was a big struggle. Initially, we started that journey with about 30 people only. And it was a big challenge that if we were offering jobs to about 10 people, only 2 would come in. Other 8 would regret saying that, if Islamic banking doesn't work out, we would not be able to go back to the conventional industry as well. And mashallah, now I'm happy to say that if we offer jobs to 10 people, every single one of them will want to come and join this profession. So it was a tough journey initially. Documentations were not available. Sharia scholars were not trained. But alhamdulillah, I think the perseverance in our team and hard work made us grow. And the growth rate of Mizan Bank, if you talk about the deposit size, obviously everything else follows that, has been at least twice as much as the conventional banking industry. And I really feel that it's not because we worked very hard or we were very smart. I think it's because there was a unmet demand in the entire Pakistan that they wanted Islamic banking. I'm sure Atif would probably agree on that they were very active in the Islamic window side, and they also saw a very good response in Al Falah Bank. So, as a country, we've seen growth coming in, not just in Mizan Bank, but all over. Obviously, Mizan is the largest, so, we actually direct the market as well. We are about 1/3 of the total market. But alhamdulillah, the awareness of Islamic banking is getting greater and greater. And in this journey of, I think, 18 years now as a commercial bank, we have more than 2.5 million accounts. So I think it's very fast progress, about 20% growth year on year in deposits. So that really shows that there is this vacuum available and a need as well. And sometimes, if there's a hype that, you bring in a slogan of Islamic banking, some people will join you, and very soon you realize that if it doesn't work out, then people will start diminishing. Mashallah, in the entire Islamic banking spectrum, whether in dedicated Islamic banks or the conventional banks offering Islamic windows, I think that growth momentum continues. So, from being the smallest bank in 2002, I think it was number 32nd, we are probably now the 6th or the 7th largest in terms of different benchmarks. So I think the message is that Islamic banking is here to stay. It's got a lot of potential, and inshallah it will stay. The other thing which I feel, especially the audience here are chartered accountants, and so am I as well. We need to bring in transparency into the system. When we make financing available to customers, and because of Islamic banking, there's some element of profit and loss sharing, we need to be more than doubly careful in terms of selection of customers. And as a result, you see our NPL right now is the lowest in the industry. It's I think 2% or something like that, which is very, very low. So because we do emphasize a lot on documentation in terms of what is available in terms of cash flows and all these things. So because if there's a downside, then Islamic bank would tend to lose faster than a conventional bank. So it helps us to document things better. In terms of deposit, about 66 or 67% of our deposit comes from retail customers. So it's a very retail-oriented bank in terms of granularity. I think it's the highest in Pakistan in terms of percentage. So obviously that helps in order to maintain sticky deposit, because these deposits, when they come in, they don't leak out. So although they are short-term in nature, but in terms of the actual practice, it becomes a long-term deposit as well. So then we are able to take longer-term exposure in our long-term projects, whether 10 years or 15 years or whatever. So it becomes easier. Shall I jump on to your next question in terms of the COVID-related thing, how it's going to affect us 5 years, 10 years down the road? I think on that one, I really want to compliment Jameel Saab, Irfan Ali Saab, our current governor, for a very proactive policy in terms of providing the short-term breather. When COVID happened and lockdown happened, we all started in terms of collecting money for food donation within the bank, outside the bank, whatever. And things were looking extremely grim. I mean, I would say that I've been back in Pakistan for now 30 years after spending maybe 10, 15 years abroad. But that was the only time I really felt a little bit pareshan, I would say, in terms of what is going to happen. That people would come on the street, they would not have food to eat, etc., etc. But I think somehow, alhamdulillah, Pakistan managed it very well. For the first month or so, our own people from the bank, they were going for distribution of food and all these things. Things were very, very different. I mean, the people were really in a state of, I would say, not knowing what to do, jobless. But all these schemes which were introduced by the government, by the state bank, I think helped industry stabilize a little bit. Our exporters, who we felt would probably default, there was open foreign exchange contract in banking scenario. We were talking about some defaults coming in there, but nothing came in through. And this currently, the 1-year moratorium in terms of principle, obviously there's a downside to it, that you would not know for 1 year what's going to happen after 1 year in terms of delinquencies. But somehow, we've done a very quick and rapid portfolio review very recently, because IFRS 9 requires us to do that. And we were really pleasantly surprised that things are not as bad as what we visualized originally. So I think I would like to pick on point which Dr. Shamshad made is Pakistan wake up. I really feel that Pakistan is a land of opportunity. I mean, I've seen it. I came back to Pakistan, started with Pak Kuwait, which was again a dormant organization. Jameel Saab and I, we knew each other he was the auditor from the State Bank side, and I was here in Pak Kuwait. So we know each other from that 30 years ago. But things were really, a bleak situation in Pak Kuwait where nothing was happening. But alhamdulillah, the same company turned around. It became better in terms of everything. So the resilience is there. But we like Dr. Shamshad said, I think we need to wake up. We need to understand that we can't run this country, not the political running of the country, but we can't operate as Pakistani citizens with makeshift arrangement by doing something which is like short-term, hit and run kind of a thing, where people will not have faith in us. The typical thing that if Pakistani send a crate of fruit to Middle East, half of them would be very, very small and half will be big. So all these things are jugaad, which will not work for too long. I think Pakistan need to wake up. Bangladesh, when we separated from Pakistan, we all used to say that, it will not last 2 years. But look where they are in our export now. Look where the currency is. It's because they worked hard. So we need to work hard. I think our skill set is there. We're an educated country, young country, English-speaking population is there. So there's a lot of things in plus for Pakistan. It's just that I hope that, we wake up with this COVID situation. We wake up that we can't run our own affairs the way we were running before. We need to be honest. We need to be transparent. And like I said, for this audience of chartered accountants, I think this integrity issue, honesty issue, transparency issue is very essential. We feel very comfortable lending to customers where we feel that they are honest, even if they are SMEs, and they are transparent. And obviously, you lend to big multinationals without thinking too much about it because you feel the transparency is there. You feel that the audited accounts will be a true reflection of that. Here in a lot of medium-sized business, even I would say in big businesses, in local businesses, they would come and very easily tell you that, the actual accounts are this and tax accounts are these. So I think we need to move away in terms of documenting our country better. I think it will only help us in really coming out of this low-end country into a medium-end country, I would say. So I think I would like to end here in case if there's any questions, I would be happy to answer them. Sorry, have I ended too soon? Nobody is talking.
No, Irfan, thank you.
Okay.
Thank you very much. Actually, we have lost our moderator, so he'll be joining us soon.
Yeah,
So
I'll
I think it's very timely.
Khalid Saab, I'll just come back. My apologies.
Okay.
Yeah, so just to sum up, just the last part which Irfan Saab mentioned, Pakistan is a land of opportunity, and it's a wake-up moment for us. He talked about the right transparency in our standards of lending, and as a result, in his experience, we have had his organization have had very low kind of losses. So I think it's all kind of looking at the opportunities which this country presents to us, and as responsible individuals, as institutions, and players of the ecosystem, we have to make sure we go about in a way where we feel our accountability towards the country in terms of doing the right things. So thank you very much, Irfan Saab, for your thoughts. I'll just quickly go back to Jamil Saab for a couple of quick questions. Jamil Saab, looking back, though the last
we are having problems. And I think we've lost Arfan again. So Irfan, I think you had to leave at 8:45. Are you okay to stay, or you'd like to leave now? We can't hear you. You've got your mic muted.
Sorry. Yeah, I'm here for 10 minutes more, and then
we still can't hear. Okay.
Sorry, I came back, just double checking. So Jamil Saab, my question was, if I'm not interrupting anyone, was how has this journey been? And what from a state bank's perspective, it's a fine balance as far as our conversion FX rate is concerned and the monetary policy rate is concerned. So kudos for the activism so far, but what should we expect going forwards, 6 months, 12 months in terms of keeping this fine balance? Inflationary pressures, external, internal. It's a job, I'm sure you must be getting sleepless nights about it. But just want to hear your thoughts. Is there any expectation, or what's your thinking around this going forward?
Arwan, can I just interrupt you? And Jamil Saab, I do apologize for this interruption. As I mentioned earlier, that Irfan Siddiqui had to leave at 8:45. So Irfan, are you still okay with staying? Sorry, I didn't hear you. Or you want to leave now?
Yeah, I'm okay for 10 more minutes, Khalid.
Okay, thank you.
Yeah.
Okay, Arwan, go on, please.
So thanks, Khalid Saab. So Jamil Saab, you have my question. If you
Okay, thank you. Thank you very much. I think first of all, let me say that if somebody asks a question from us that what is the expectation on monetary policy and exchange rate, so the answer normally which we give is that you can have a look at our recent monetary policy statement, and it gives you the current account of the situation and then also some indications for the future. But having said that, I think if you look at the recent actions which have been taken by the Monetary Policy Committee, so we have reduced the policy rate by 625 basis point within a very short span of time. I will say relatively very short span of time. And we are one of the highest actors, I will say, as far as the policy rate is concerned worldwide. If you look, we have the rate cut which we have done and the time span within which it has been done. So it's quite historic and also compares quite positively as far as the other countries' actions are concerned. This has been partly, I think, facilitated by significant reduction in inflation rate and also some of the other improvements which we have seen, particularly on the external front. We have seen significant improvement whereby the current account deficit during fiscal 20 coming down by around 78% as compared to last year. So it's well under control now, less than $3 billion for the current year. So it's a, I will say, huge improvement. And as a result of that, it has also facilitated as far as the exchange rate is concerned. So we have seen good stability, I will say. But again, it depends on the on further development. So we are not in a position to say anything what will happen going forward. But when we look at the things now, I think it's quite stable and moving both way and within a very reasonable band. So and this is facilitated by reduced oil prices and some other improvements which we have on the external side. Particularly, I would like to mention one area where we have done fairly well, and that's the FX remittances, which we have foreign remittances, which we have received. It has for the first time crossed the mark of $23 billion. And despite the World Bank projection that our remittances will decrease by 20%, it has in fact increased by 6% during fiscal year 20. So as against the situation in many other countries, countries which are comparable to us, whereby the remittances have significantly declined. So it's a pleasant surprise for us. And I think in order to maintain this situation and to improve the level of remittances, the central bank has taken a lot of actions already, whereby we have facilitated banks and their foreign tie-ups, and also to some extent to the remitters of these remittances also. And already we are coordinating with the concerned government ministries, whereby a number of other actions are also in progress, which once taken will further strengthen our remittances flow. One particular area which I would like to mention, which we are very actively working, is the launch of digital account for non-resident Pakistanis, and on which we have coordinated with selected number of banks already, and they are in the process of testing their pilot projects. So soon it will be announced formally. So this will enable the non-residents Pakistanis to open their accounts online, and the KYC and other formalities for opening of accounts will be done very smoothly online, and they will not be required to visit physically to any branch, and documentation will also be simplified. So I think there, and then through those accounts they will be able to make investments not just in stock market but also in bond markets and even in properties and some other avenues. So I think we are quite confident that this will contribute in increasing the flow of remittances, which is quite crucial for our balance of payment issues. So that I think will I will say facilitate, along with some other actions which we are coordinating with government and which will be taken soon.
Thank you, Jamil Saab. I think two very, very important wins, as you've said, remittances staying on track and bettering the past trends despite the difficult situation we are in. And on top of that, the overseas account opening, I'm sure it's going to open up more doors for inflows and more doors for investment opportunities. Before Irfan Siddiqui Saab, you leave, I just want to ask you the question in terms of the role the Islamic banks have played, and especially your bank. Do you see a regional role as well in terms of where the leadership role in terms of the product development, in terms of the new product, and you, mashallah, you've got an extensive team to support you, and you have been at the forefront of development, product side as well as sector side. So what are your thoughts in terms of the future of Islamic banking vis-a-vis this kind of a role?
Right. Thank you, Roman. I think going abroad right now in terms of putting capital outside and opening a branch network, I don't see that happening, especially in this post-COVID situation. Even pre-COVID, the capital requirements were so high that it doesn't become feasible. But in terms of technology or transfer of technology, I would say for Islamic banking, we are helping a lot of banks outside Pakistan as well in terms of product development, providing training support, providing Sharia support. And I think I'm happy to say that in terms of a Sharia department, I believe that Mizan has got the largest Sharia department in any Islamic bank around the world. We've got about 60 people, which includes chartered accountants, MBAs, lawyers, just in the Sharia compliance section. So we're very, very well equipped to take this technology abroad in terms of providing that. And our previous government, our finance minister, when he went to London, Dar Sahab, he said that I was very sad that London wanted to become the Islamic banking hub for the world, whereas in Pakistan, we've got so much happening, but we are lacking behind on that. So I'm sure that, with some hard work and consistency, Pakistan can be in that position. And especially now being digital, everything is happening digital through these Zoom conferences. So Pakistan can step up their efforts in terms of, contributing more towards Islamic banking cross-border.
So thank you very much, Irfan Saab, for your thought, and thanks for your patience for staying with us. So my next question is for Sayyid Irfan Ali Saab. In terms of, sir, the measures which we have been, which the bank has taken so far, and we move into the future, future territory in terms of the 5 years and 10 years plan. And the regulations around the payment system and making sure the banks are digital. How do you see the payment system, the e-wallets and the EMI regulations, digital bank shaping up in terms of next 2 to 3 years? Because it's absolutely important that banks step up to the task which is being out there in terms of this particular ask. So what are your thoughts, Irfan Ali Saab, on this?
Yeah, thank you, Armaghan again. I think the thought here is that things are shaping up for the better. In fact, in the past less than 1 year, we have already given since e-money institution licenses. The number of e-channels itself is increasing. As Atif Bajwa said, the way the digital thinking is evolving. Then State Bank of Pakistan is working on a licensing, on a policy for digital banks. And we are getting calls from venture capitalists to invest in Pakistan in the high tech area. And the State Bank of Pakistan is working on a micro payment gateway. And the government independently, the Ministry of IT is working on an international payment gateway. So the way these fundamental changes are coming in place. And so in the next couple of years, I see a major transformation from the conventional way of doing business to the digital way of doing business. That is that I see changes in what Jamil Saab told you. There are digital accounts coming up. So we will soon be making that announcement. In fact, the Prime Minister will be doing that. Then we have, as you are most all bankers are aware, there is VBOX, so trade is being digitized. Then there is the Pakistan single window that we are working on with FBR, State Bank, and the financial sector. So I see a lot of positivity. Where I see things lacking is where I get worried about ads coming on about banks talking about free checkbooks, for things which pertain to paper-based transactions. So that is where digital comes to challenge. Otherwise, things are very much positive. So my request or advice to the financial sector would be to have a keen look at their processes. For example, in State Bank of Pakistan, we revisited our processes, and right now we work on a knowledge management system whereby each and every department is linked with each other through technology. So no more paper files being moved, no more pen signatures by pen. So it originates from the grade 2 officer, and it goes directly to the governor, or it ends up at my level or the director level or the deputy. So the organization has spent money on not only on systems, also on people. So start to spend money and effort on training people on digitization. Digitization will happen. It is happening, and it is happening. COVID-19 is I shouldn't be saying that, but obviously COVID-19 is not a pleasant experience. But from a digital point of view, it is indeed. It has changed the way we do business. Yeah, thank you.
Thank you, Irfan sir. No doubt it's not a pleasant experience at all, but it's as using the term by the other panelists, it's a wake-up call. And with the opportunities, inshallah, which this country has to give and offer us, we should again try to look at the glass half filled and make sure the necessary steps are taken. I'll quickly go to Atif Sahab here for a quick one. Atif Sahab, what we have heard today, we have heard about you also talking, Irfan Sahab also talking, and the guidance from Dr. Shamshad in terms of the change which is required in the future and the guidance from State Bank. Now, this is as a commercial bank, as a financial institution, isn't this a time where we should go back to the drawing board and reassess how we stay relevant, how we stay organic, how we stay futuristic in this space when the digital transformation sectors, unbanked remittances, a lot is happening here. So is it a moment where we should go into our strategy part as financial institutions and look through how we're going to stay relevant, sir?
Absolutely. I think this is the right time to reassess where we are and where we're going. So just as an example, it's just not a coincidence, but we have just embarked on our next 5-year strategy internally at Bank Al-Falah. It's a coincidence that the last 5-year strategy just ended now, so we have to, in any case, do it. But now we have to do it with a different pair of eyes and a different thought process, which is the next 5 years are going to be vastly different from whatever we could have imagined had we been doing this strategy formulation without COVID-19. So you're absolutely right. We have to be doing this. We have to start now looking at the areas of weakness where we were not present. So something that's close to my heart is the SME sector, for instance. Banks have tried and failed to really make a significant dent in being relevant to the SME sector. Either as lenders or even as providers of other banking services. So I think this is a time that we can actually see and try to assess how these value chains work, which engulf the SME sector, and really have very targeted products and services that will address their needs. So it's really sad to see that of the whatever number that is used for SMEs, there are millions of SMEs that less than 5% of them actually have access to finance. But more importantly, they don't even have access to basic banking services. Now, digital can actually change that, and technology can actually change that. And so what we're doing is we're working with our big corporate customers, who I call the anchor customers, and then we're trying to dig deep into their supply and distribution chains where the SMEs actually reside. And we work through the anchor customers to go down and see what can we do for your suppliers and your distributors and your vendors and various other people. And we're trying to use technology to be able to deliver those services. So it's an attempt, and as we go down that path, it's very apparent that this space is absolutely huge and it's just been untapped. Yeah. So that's one example of what you were saying. We need to start thinking differently. The other thing, of course, is what Dr. Shamshad pointed out earlier on, that we haven't really promoted savings. Banks are partly to blame, but I think there are far bigger things also at play. That approximately 44-45% of total money supply is actually in cash. It doesn't come to the banks. So her point about deposit mobilization. So I think we have to have products. We have to create an ecosystem where cash is discouraged, or if not discouraged, it's far more convenient to use non-cash instruments to pay. Yeah. And therefore, some of that cash staying in people's houses becomes, irrelevant and has to come to the banks. And that's an extremely important element that will drive growth, because 1 rupee coming to the banking sector, for those who are students of economics, Dr. Saba may correct me here, but the multiplier effect of the banking system for Pakistan is estimated to be about 3.4 times. So 1 rupee coming into the banking sector multiplies economic activity 3.4 times. So, the more of that cash that's lying in outside of banking system, the more that comes in, the more growth that creates. One other area where the government is actually finally trying to fix the ecosystem is in the housing market. So why is it that banks don't really lend aggressively in the mortgage sector? Because the ecosystem it needs to be strengthened, and that has to do with not only foreclosure, but it has to do with the titles and the clarity of titles and transparency and the speed with which things move. So for the first time, it seems like that the government actually has a plan to address those things through the planned creation of RERA, which is the Real Estate Regulatory Authority, and fixing the laws and creating that environment. And I think if that can get fixed, and if the banks, as the target has been given to us, of course, 5% of our total lending in the sector, but if 5% should be a target just for mortgages, not the entire construction sector. And it can happen. It may not happen in one or 2 years, but over time, mortgage lending growing means that it is supporting the construction sector, and it is it's supporting the insurance sector. It's 40 different sectors get supported by construction and housing and other developments. So
thank you. Yeah. So thank you, Atif. Thank you for your thoughts around the fact that we have to do a lot more. So I would try to sum up the discussion and go to Dr. Saab again for her final thoughts. So just to conclude, the point around public and private partnership in this environment and going forward is going to be of critical importance. So while steps are being taken in construction and other sectors, I think it's also important that support and that linkage is maintained across the network. We have seen some great positives in terms of the SAS program, where your institution as well as our institution was part of. So again, making sure these huge amount of funds are channeled through the right needful people. So again, that's another example of where everyone got together and worked around to deliver something back to the economy. But
yes,
a lot, yeah.
to interject there, I'd like to just make a point there. This particular point about Ehsaas is something that we should all be very, very proud of, because 144 billion rupees were distributed to 12 million people in less than a week in cash, end to end. I think that's something that never all digital transferred. The last mile was cash, which was delivered to the poor women, that of course, but this is something that has not been done with this speed anywhere in the world. So I think the ecosystem that was developed with the help of the state bank and the government and the banks, of course, played a role there. I think it's a great achievement.
Yeah. Thank you, Atif. So, Dr. Saab, you have heard.
I'd like to second Atif here. I think this is something that we should all be very proud of. It is, in fact, Bank Al-Flah and Habib Bank, and I can share you the latest figures, and the figures are that 162 billion rupees have been distributed among 14 million people. This is exceptional. It has not happened anywhere else in the world, and this has just it started on April 9th, and the data that I'm sharing with you is of yesterday.
Yeah.
Thank you.
So thanks, Irfan Saab, for your comment and your support. Dr. Shamshad, in summary, I think there is a clear acknowledgement. Jo aapne baatein start mein ki ki there's a lot to be done. Yes, we are not there, and what needs to be done, if there are any final thoughts from your side, final guiding principles. The challenges are absolutely there in terms of the ecosystem, the undocumented part, the SME part, the women part, the rural part. So whilst there have been steps taken, and State Bank has been, mashallah, very active in that space, I think that there is a clear need that all the players in the ecosystem come together and make sure we take the right steps for our system, our country, and our economy. So, Dr. Sahiba, your final thoughts on the subject, please. Sorry, I kept you waiting for long. Sorry, you're mute, Dr. If you can unmute yourself.
Yeah, thank you. It has been fascinating listening to Jamil Saab, Irfan, and Atif, and of course Irfan. All these people I have worked quite a bit with, and I don't think we can have any differences of view between ourselves. Pretty like-minded group of people here. I'd like to say that when I was talking about the financial sector, my issue is not that we are unhappy with the pace of the things that have happened, say post-COVID or even pre-COVID, or for that matter, with the evolution of our banking industry. I think after the banks were privatized, people who know the state of the state-owned banks will appreciate the drive that the private sector brought in. Now, the dilemma right now is that Pakistan's demands are huge. It's a growing population. It's already 210 plus million population, where only 7% of women have access to credit, and less than 1% have access to women entrepreneurship program. I'm just giving you one example. So we can celebrate everything. Of course, we have to celebrate, because if we don't celebrate, the gloom and doom is not going to get us anywhere. But the issue is we need to do much more, and we need to look at some fundamental issues. One is the point you made about public-private partnership. So if the private banks are striving to get this, I mean, who in private bank would hesitate earning more money? Everybody wants money, and money comes if you are able to lend, not elsewhere. And if you're making loss, of course, you'll be unhappy with it. So the key question is that if you are taking risk, you want the policy environment to be supportive. So as Atif said, if we get the housing policies right, the legal, regulatory, the comfort, then who doesn't want to lend to housing? Of course, you want people to have houses, you will earn more money, the industry will be spurred. You look at infrastructure. We tried to get public-private partnership going in a faster manner. Of course, public-private partnership is happening, but speed is of essence. So there is whole, when we say ecosystem, there's a lot of things that go with it. At the top, of course, you need macroeconomic stability, and you need uh, the fiscal temperature to be down, because if the fiscal temperature is high, then ability to have a efficient financial intermediation is very limited, because you'll end up having much more costly process of financial intermediation. If the banks are going to invest 40% of their holdings into government securities and another 20% in liabilities, now what intermediation will you have? I was pleasantly surprised when I looked at the figures of the banks ending December 2019, that actually, while the big banks were much lower on ADRs, actually the smaller banks are really churning their money much more. They had 60 to 70% ADR relative to the bigger banks. Now you can see that it's very important for everybody to earn money, and particularly for the smaller banks, because they don't have a bigger base to thrive on. So the thing is, we need the sector ministries, the kind of political leadership to focus on really timely, effective resolution of the policies. So public-private partnership is great, but it's not going to, you can't go too much into it, because you'll end up making losses if you continue with a weaker policy environment, or if you have a very weak solvency system, and so on and so forth. My last point, which I mentioned, was I don't see any interdependence between the banks, capital markets, and the insurance sector. Every segment, which is principal segment, is operating in silos. To make it a bit stronger, the issue is that obviously we have a stronger regulator in the banking sector, which does policy as well as regulation. Now, if you look at insurance, you have policy and regulation separate, but also you still have huge state-owned sector. So there's a dilemma in these sectors. You look at stock market, there is no major listing that happened for a little period. Now we are celebrating 1 or 2 listing of this year. So we can't survive on 2 listing or 3 listing. In countries, besides deposit mobilization, banks rely on raising bond issues to be able to supplement their capital. I was mentioning refinancing. Refinancing is not the only tool, is my point. You can raise money, but the issue is you want the system to work in a holistic and integrated manner. Everybody is going in different directions. Now, I'm not saying things are totally a disaster, but we should strive for a much more ambitious, aggressive progress in the financial industry. It's our lifeline: economic growth, poverty reduction, inclusive policy, sustainable development, and we haven't even touched the climate finance dimension. I am working currently with a group of people on climate finance, and there is this big group of the central bankers that have got together and central bankers never wanted to take responsibility for climate finance. Now 49 central banks have agreed, and the literature's come out a new regulation, and the new regulations are being prepared for this to agree on a system. And this will all be, there is also climate disclosure of the project transactions. ESG, I was pleasantly surprised when I was in ICAP, when I interviewed 4 banks, that we did have ESG due diligence portfolio. And it is there, but we need scale. We need scale. So I am just saying, given our population base, we need to go for scale, but we also need to resolve federal, provincial issues. I mean, we try to promote microfinance in certain provinces, very difficult in Balochistan, Sindh, or for that matter in NWFP. Why is that? Why can't we work holistically as a nation to support the financial system? Financial system wants to work more, but it can't unless the public policy is there, and also the public policy is not uniform. So I'm going to stop here, but to say that I don't mean to cast shadow in the debate. I'm very excited about financial sector, but I see tremendous opportunities, as I mentioned. If only 7% of the women are getting access to credit, what a big business you have there. Women are great borrowers because they repay loans. So that's 21% of your adult population has bank accounts. What a big opportunity we have. So I mean it in that sense. 88 to 10% of GDP we need to invest in infrastructure. What a huge business banks have, or for that matter, capital market. I just say we need to move on because today our poverty incidence has gone up. We had come down, our multidimensional poverty was very high, but now it's going up again.
Thank you, Dr. Shamshad. And trust me, all your honest feedback and very passionate feedback, I think all of us, I'm speaking on behalf of the other panelists, as well as myself, I think we take this fact in the positive stride that, yes, we as a financial system, we have a role to play. At the same time, we are part of the bigger system. And there is a need and expectation that at all levels, government levels, provincial level, as well as the various regulators which are at play, we have to come together and make sure the basic necessities and the economic requirements, as you've rightfully said, about inclusion, women inclusion, about poverty alleviation, these are actual challenges which may impact our futures of the country, i.e. the food supply sustainability, how supportive we are to the development finance around that space. So it's, I think, as a wake-up call, as a very important point for all of us to realize that going forward and taking all these positives which State Bank and other banks are doing right now, I think we need to do a bit much more, as you've rightfully said. So I think that's something which is very tangible, and I fully agree with you. And if any panelists have any final thoughts on the points, Jamil Saab, if you want to say something before we start taking the questions from the audience, I'll be more than happy to move on. So Dr. Saab, very thanks a lot for your candid thoughts. It's been absolutely brilliant to have these honest thoughts on these subjects, which are very important. And as you said, these are a livelihood. So we have to be very, very careful and honest about these. Ji Jamil Saab.
Thank you. I think I just noted one of the comments that only Dr. Shamshad has pointed out some weaknesses. So I noted it with a lot of interest. So I'm not saying that everything is fine and there are no weaknesses in this system. Obviously, there are issues, and that's the reason we are coming out with various initiatives to address those issues. For instance, we have recently seen some stress on the credit portfolio of banks also, but you see, when somebody will ask a question, is it a threat to the banking system? I will say no. I mean, banks are very, very stable with 17% above that capital adequacy ratio, and NPLs ratio though at 8.6%, but it's still, I think, a very manageable level. And particularly the thing which gives us a lot of comfort is the level of provisions which banks are holding. And as a result of that, the net NPLs, which are, after taking into account the provision already created by banks, so it's, under 2%, which is in line with many other countries. So, so issues are there. Similarly, with the increase of digital payments, cybersecurity issue, it has got much more significance now. And that's the reason we have been coordinating with banks to come out with strategies how to best address the cybersecurity related problems. And similarly, frauds are increasing in otherwise also. So these are issues on which we are working with banks, and obviously health issues of bank staff, because they are exposed to COVID much more than any other sector also. So
Yeah.
we are emphasizing upon banks to take steps for ensuring their health and safety also. So I think with that I will stop.
थैंक यू जमील साहब। देखिए हम बात करते हैं वॉरियर्स की, फ्रंट लाइन की, डॉक्टर्स की, लॉट ऑफ पीपल LEAs which are working in the front line. I think, as I said at the start of the conversation, the banking staff operating banks operating at 80%, 85% capacity in these times under the guidance of State Bank of Pakistan. I think hats off to the industry which has delivered so well, so positively, and they're putting their own lives and health at risk. And we have the SOPs. But how would you manage an SOP in Nawabshah on a salary week? And I've been to those branches and I can see those challenges. So I think the staff at the forefront is absolutely doing a brilliant job. And Jamil Sab and all the panelists, thank you very, very much for all your valuable thoughts and taking out time and contributing to this discussion. For the audience, the viewers, I like to just highlight, if you can fill in the polls. We'll start taking your questions now so we can complete the poll and show the results here. Rauf, if you can share the slide deck of the key questions which you have pulled out for discussion. Right. So the first question I have here is about so it's basically, I think I'll direct the question to Saeed Irfan Ali. Sir, the question is, the government is offering much better rate of returns in their papers. So how would basically banks be motivated to invest into real tangible businesses, sir?
I mean, the banks will actually have to reshape their balance sheets if they intend to do so. And there is no doubt that with the government borrowing, crowding out the private sector, so the banks really don't have much incentive to lend to the private sector. But if you compare the smaller banks, like Dr. Shamshad pointed out, in comparison with the larger financial institutions, you can see that the ADR is definitely getting better. So it is up to the banks themselves to strategize their balance sheets in a manner whereby they need more and better information to enable them to take better credit decisions. So that is where they will be able to lend to SMEs and agriculture and for personal loans. I think that it really has to do with the way banks intend to shape their balance sheets. If they intend to keep it low risk, low return, so that's the way it is. If they want to make higher profits, then they'll have to take higher risks, but will have to improve their information base to take better decisions.
Thank you, Irfan Saab. And it was a great question by M. Shoaib. So in summary, it has to be about responsible banking. It's about getting that purpose into the institution rather than purely looking at the financial outcome. It's what the economic impacts, what as an institution we have to give back to the community, to the people whom we serve, and to the country we operate in. So a brilliant question and a great response, Irfan Saab. If you can move Rauf to the next slide, next question. I think the slide is stuck up. I've got a question here, which is asking by Khalid Noor, why is Islamic banking rates tied to Kaibo? Is there any alternate in sight? So as Irfan Saab has left, I'll volunteer to answer that question because I myself have been a student of Islamic banking. So yes, there needs to be an alternate benchmark. Globally, we used to follow Kaibo. LIBOR. In Pakistan, we follow the benchmark. I think the institutions and Islamic financial services need to develop more for us to have an alternate benchmark in terms of pricing, in terms of smaller tenor liquidity management tools, and options. So I think it's something which is definitely good, absolutely the right thing to aspire for. But I think we aren't there yet in terms of the desired state. Okay, I have another question here. The question is, I think we have answered it during the discussion. How can we facilitate SME and new startup access to finance? So I think that's been already answered. So again, it is about getting down to the responsibility of lending to these SME setups, whilst the targets and policy actions can be set up at the national level through the regulators. But I think it is more about bankers taking ownership of making sure they become part of the real economy which is unbanked, and traders and other people who are absolutely core to our economic well-being, but are not getting the necessary traction. So again, that was a great question by Khalid Noor, and I think hopefully that will suffice. Rauf, are there any more questions? So yes, we still, there's another question by Salman Muslim. We see that we are giving relaxation and amnesties to various areas, laws in these sections, but in such situations, how can we document the economy? So it's a question about documentation of the economy. I don't know, are there any volunteers from the panelists to take up this question?
I think, let me respond to it. I think State Bank has been responding to this question in the past couple of months since the announcement by the Prime Minister. This amnesty is tax amnesty. So it has nothing to do with the fundamentals of AML-CFT that the banks have to follow. So you are under every obligation to enforce the AML-CFT. This is tax amnesty only, and that's the way it has to be understood.
Thank you, Irfan Saab. The other question which we have from Fawad Aftab, it is about the NBFC sector, and that the question is around the microfinance banks have been successful in performing better. Why did the NBFC sector did not perform that well? So Atif Saab, would you like to take this question?
I can certainly try. I think what was said in the earlier part of the conversations was that the banking sector is a regulated sector and has over time developed very strong mechanisms for risk taking in the lending process. And also, very importantly, the funding of the loans is well balanced. NBFC sector, while they have attempted at various stages, have not been structured in the same way as banks have, in terms of skills, in terms of funding and the diversity of funding, and also the lending was not diverse enough to distribute the risk effectively. So also size and scale, they've not been able to create that size and scale. Of course, if you go back in history, DFIs had been very successful and were largely responsible for the growth of the industrial sector in Pakistan. Those were properly capitalized. They had good proper skills, and they were funded, and they had an objective that was long term. And I think they fulfilled their role extremely well. So NBFCs can, but I think they're the fundamentals of scale, capital, funding, and the skills to take the right kind of risks.
Okay, thank you, Atif. Thank you. Rauf, if you can share, do we have the results out from the poll?
We'll share it shortly. You can move on.
Yeah. So I think we are done with the audience question now. And then before we get the results, Khalid Saab, and in terms of this session, I think it's been very helpful for the audience. I would like to invite Khalid Saab to share his thoughts and say thank you to the panelists and the outcome and the discussions which we have had today. So Khalid Saab, over to you. What are your thoughts?
Thank you very much, Arkoman. Assalamu alaikum, ladies and gentlemen. A very good evening and thank you for joining us today. Today's webinar on financial services industry was our 7th webinar in the COVID serial, being hosted by the Professional Accountants and Business Committee of ICAP in collaboration with our regional committees. Our previous webinars were initially on broader topics of economy, business transformation, organizational resilience, stress management, and now we have narrowed down discussions to specific industries and business segments. We have covered oil and gas and healthcare and pharmaceutical industries in our previous webinars. And today's webinar on financial services was an extremely important topic. And I fully endorse the views of our moderator that the banking sector requires a big salute for the service during this period of COVID, and the staff working and being in the forefront, is facing the public and being exposed to COVID. And the State Bank of Pakistan working day and night to be able to take the banking system forward. Equally important was the capital markets, and I think the entire financial services industry worked very well with a lot of resilience to be able to deliver what this country required. So my congratulations to the State Bank of Pakistan and to the banking community. The discourse of our panelists today was superb, absolutely superb. Dr. Shamshad Akhtar gave a very informative overview on the Pakistan economy, and she strongly advocated macroeconomic stability and interdependence of financial system, including banking, insurance, asset management, and capital markets, which obviously required coordinations amongst the regulators of the financial markets. And I think this is a very strong recommendation which we should take home, and it would be a good, important point for ICAP also to take forward in terms of the economic advisory advice that we give to the government. She also talked about the public-private partnership and women inclusion. Not that she's a woman, but I think from ICAP perspective, we have a separate women's committee, and it's on a very high agenda of ICAP. She talked about sustainability, development financing, and more important was the climate financing that she talked about. Going forward, this would be the biggest challenge for any country to be able to bring in the two sustainability. Sustainability is not economic. It has to be environment. It has to be much more than that. So thank you very much, Dr. Shamshad Akhtar, for giving us a very good overall view of the economic scenario, combining it with your international experience, comparison with the compatible economies, and how and what Pakistan can do going forward in terms of bringing some resemblance of good competition. I'm extremely grateful to Mr. Jameel Ahmed, who at short notice was able to join us. Jameel Saab, you have been very kind to us, to ICAP, and we are extremely grateful to you for all the support that you provide to us. You gave us a total update on the initiatives taken by the State Bank of Pakistan to support the business continuity and to keep the economy rolling in COVID situation. The steps that you advised us will go a long way in terms of ensuring that what would have gone down is still up the ground. And and I'm sure with that spirit and the work that you all have done will bring a lot of benefits going forward. We were absolutely delighted to learn about the micro payment gateway and the financial inclusion, which is absolutely important in terms of any economic prosperity. Uh, the steps that the State Bank of Pakistan took on policy rate and also simultaneously encouraging remittance and opening of digital account for non-residents are commendable. And all these steps during an emergency in a crisis situation, you were able to do our heartiest congratulations to the State Bank of Pakistan. Mr. Syed Irfan Ali, who has been the coordinator for State Bank and ICAP matters. Thank you very much, Irfan Saab, for joining us today. Your wisdom and your guidance to us on all matters relating to professional coordination between ICAP and State Bank of Pakistan has always been appreciated. And the work that you are doing on the FATF agenda is absolutely commendable. Your recommendations has been accepted in full and adopted into a legislation. And I think the State Bank of Pakistan, and you told us about Dr. Shamshad initiating the FMU, she has a vision, and I'm sure that what she worked on in State Bank of Pakistan, I'm sure you all will be benefiting out of it. And you advocated digital thinking. It's not only evolving, but it has more or less evolved. The major transformation from digital to from conventional to digital is absolutely paramount. And you told us about the numbers in the SARS program, which is absolutely brilliant. Rupees 16 billion to 14 million people is unheard of. So thank you very much, Irfan Saab, for being with us today. You have always been a guiding force, and we look forward to your contribution going forward. Atif Bajwa Saab, you are a man who has immense experience. You have worked in international environment. You've worked in different banks, in different environments and banks. And we were very fortunate to have you as our panelist today. So thank you very much, Atif, for being with us today. You talked about a change from the temporary support to provide longer term support. And I think that's where the challenges of the banking system is to make this support and to evolve a system which is going in the future. You talked about support of the debt equity instruments, and I think that's the key to any economic activity. The banking system cannot support the entire financing requirement. It has to be through multiple financing sources, and I think the other instruments would have to come in. You talked about the capital markets, raising long-term capital, and you are passionate about the SMEs. And I think for any economy to evolve, SME is the key. If you can't promote SMEs, if you can't develop them, if you can't nurture them, you will just have giants and nothing below that. And you'll have mediocre performance. So thank you very much for pointing and being passionate about the SMEs. Again, you were also passionate about digital transaction, paperless environment from start to end. And you talked about the HR strategy gearing towards technology. And you're so right. This is the way forward. The country can only move with technology and digitalization. But I'm pleased that like any other country, Pakistan has really adopted to the technology very fast. I mean, what we could have never thought of of having these continuous webinars and sessions and discussions and home working and whatever, it's become totally possible. And I'm sure if there's a will, I'm sure there'll be a way. As long as there is transparency and there's honesty, I'm sure that we'll be able to deliver what we want to do. Irfan Siddiqui, he's a pioneer Islamic banking. He's a fellow chartered accountant, and the management is chartered accountants there, Arif Islam himself and others. They're doing a brilliant job. And what they've been able to do in Islamic banking and develop the system in terms of Sharia banking, I think full marks to them. And they have now 150, 200 branches, absolutely remarkable. And, he talked about that there have been no defaults, hardly any bank defaults in the Islamic banking system. So if it's anything work that is done properly, it will always bring in good results. And the last but not least, he talked about faith. And I think that's where we should strongly, we need to have to be able to take our vision forward. I think that was the discourse that I understood. There were many other things. I'm sure that they will come out in a webinar paper. We issue a post-webinar paper after each webinar, which captures all the discussion that takes place. We'll get to know more, but I just wanted, for benefit of myself, summarize what I understood came out of the discussion today. So as I said, that we are deeply honored and privileged to have the presence of highly distinguished and accomplished panel. I've already thanked Dr. Shamshad Akhtar, Mr. Jamil Ahmed, Deputy Governor, Mr. Atif Bajwa, President and CEO of Bank Al Falah, Mr. Irfan Siddiqui, President and CEO Mizan Bank, and Syed Irfan Ali, Executive Director, State Bank of Pakistan. I tried my best to make our fellow member, Mr. Ar-Rahman Kausar, nervous before this session, and prior to that also in my discussions with him. But he definitely failed me, and he did an excellent job. So Ar-Rahman, you get full marks. Thank you very much for excellent moderation, for the confidence, and we are very proud of you as a member of ICAP. So keep it up. You did an excellent job, and really pleased and happy to see your performance. Now, coming to ICAP and the PIB committee, we, as a committee, there are a lot of volunteers in the PIB committee. They're full-time, they've got full-time jobs, but they've been very kind to come forward and support the efforts to serve the membership. We have an excellent staff at ICAP who has been organizing these webinars. So I want to name a few. The main organizers of today's webinar were Mr. Rauf Jan and Ahmed Shaukat Hussain. So my big thank you to both of you. Excellent work done. They had the support of Fuad Aftab, Sayyid Muhyiddin, Murtaza Feroz, Asad Feroz, Khalid Noor, Ambar Anwar, Imran Hafiz, Adnan Usmani, Arsalan Rabbani, and Shanawaz Abro. And I'm thankful to each one of them to put in a lot of effort to be able to coordinate things, to bring things in place. I get to know the work that they're doing because they keep me in the loop. So excellent work done. Thank you very much to all of you. Since we are running out of time, I'll be very brief on the PIB committee. It is there to service our membership working in the industry, in the business industry. And 80% of our total membership is in industry. So we do a lot of things, including CFO conference, National Finance Olympiad. We have a mentorship program. we issue industry-specific guidelines, and so on and so forth. Now, we have these webinars on a fortnightly basis. As I mentioned earlier, that we've narrowed down to industry. Our next webinar would be on the power sector, and we'll have, again, a very distinguished panel of Chairman NEPRA and members of the power generation and power distribution fraternity. I would like to thank President ICAP, Khalilullah Sheikh, and other council members for the guidance, support, and encouragement. May Allah bless you all and keep you safe and healthy. Allah Hafiz, Pakistan Zindabad, Pakistan Paindabad. Many thanks to all of you. Allah Hafiz.
Thank you, Khalid Saab. Thank you very much. And good to